Today's video is about self-discovery. What kind of investor are you? Is there really a kind? Does it make a difference? Spoiler alert, it does. Continue watching your favorite channel, The Teenage Investor, and we will dissect each kind of investor and learn the tricks of the trade. Welcome back to another exciting video. I must start by thanking you for your love and feedback on my very first YouTube video. To show your support, be sure to hit the subscribe button below and like this video. Thank you. So friends, let me start by saying there are hundreds of types of investors. But today, we'll focus on the top 5, which pretty much covers 80% of all investors. Keep watching, as I bet you'll be surprised by the 3rd and 4th type of investors. Let me not give it away. So without further ado, let's get started. The first type of investor we're covering today is the fundamental investor. A fundamental investor looks at the fundamentals of a company. What do I mean by fundamentals? A fundamental investor will mainly look at the 3 basic things of a company before deciding whether to invest or not. Those things are: 1. They understand and learn about the company. 2. They use financial ratios for initial screening, including reviewing the company's financial reports. 3. They check the company's competitors and future prospects. Let's take an example. If you're a fundamental investor and somebody came up to you and said, "Hey, buy stocks of Apple," here's what you would do. 1. Understand and learn about Apple. This is probably the easiest part because I can probably bet that you know about Apple unless you're living under a rock. If you are living under a rock, Apple is the largest technology company, selling consumer electronics, software, and other online services. 2. You'd look at Apple's financial ratios. As of 2019, Apple stock generates an earning of $12.60 per share. This is also known as EPS. Apple's earning per share has been consistently increasing each year, and this is an indication of a growing company. Another very popular ratio to look at is the PE ratio. This stands for price to earnings ratio. The PE ratio is the price divided by earnings per share. A higher PE means the stock is overvalued. Apple's PE ratio is 22.47 and is very comparable to tech giants in that sector. And let's not forget Apple's revenue. It's a whopping $260 billion. 3. Competition analysis and future prospects. Apple does not have very strong competition in its space. Yes, we have Samsung and Google, but they don't pose a significant threat. Plus, Apple continues to innovate. Apple's each product is a company in itself. Did you know if AirPods were to be their own company, they would be in the S&P 500 and would generate more revenue than Spotify and Twitter combined? So, if you're a fundamental investor, you probably have Apple in your portfolio. One of the most famous fundamental investors is Warren Buffett. This man needs no introduction. The sun needs no light to shine on itself. His $75 billion net worth speaks for itself. Known as the Oracle of Omaha, he started buying stocks at the age of 11, and he actually started filing taxes by the age of 13. No kidding. At the age of 14, Buffett bought a 40-acre farm with his $1,200 savings. And by the time he had finished college, he had accumulated $9,800 in savings, which in today's term is about $105,000 USD. He strongly believed in the companies in his portfolio and invested based on fundamentals. Today, Warren Buffett runs Berkshire Hathaway, which owns more than 60 companies, including Geico, Duracell, Dairy Queen, and others. Moving on to the next type of investor. This is a close cousin of the fundamental investor. This is the one we call a value investor. A value investor is one who buys a stock of a company and holds it for a long time. A really long time. A value investor believes that the market will give good return in the long term, even if you factor in the volatility. A value investor believes that an investor will never see such returns if they bail out after a decline. So let's see how a value investor will behave. Let's look at a value investor who bought 500 shares of Amazon stock on October 2nd, 2009 at a unit price of $89.85. In June of 2011, Less than 2 years after he or she had bought the stock, Amazon's stock price doubles, but he or she does not sell it. A value investor is here for the long term. Today, Amazon's stock is worth more than $2,300, and Mr. or Miss Values Investor's $4,500 is now worth $1.15 million. So friends, remember that a value investor is here for the long term and is very smart and intelligent and always picks his companies wisely. Benjamin Graham, yes, the same gentleman who wrote The Intelligent Investor, is known as the father of value investing. Graham believed that an owner of equity stocks should regard them first and foremost as a conferring part ownership of a business. With that perspective in mind, the stock owner should not be too concerned with erratic fluctuations in stock prices, since the stock market in the short term acts like a voting machine, but in the long term, it acts like a weighing machine. Since we have met the fundamental investor and his close cousin, the value investor, it's time to meet Mr. Bargain Hunter. This kind of investor circles the market like an eagle, waiting for the weak and wounded to fall, and then they pick up the pieces. Remember, he or she is not cheap, but very smart and super patient, and gets excited when something is priced ridiculously under its value. So let's see what a bargain hunter will do during these troubled COVID-19 times when stocks are taking a big beating. Our bargain hunter will not just go for any kill, but will look for a prize kill. So what will a bargain hunter do during the COVID pandemic? Maybe buy crude oil at negative $37.45. You heard it right. A few days ago, for the first time ever, crude oil was trading at a negative price. The oil producers would actually give you money to buy their oil. You may be wondering why that happened. Quick note on that. As you can imagine, everyone's staying at home, there are less flights and no cruises, so that caused a sharp decline in demand for oil. And oil producers had no place to store their oil, so they were ready to pay you as long as you could store their crude oil, hence negative $37.45. Talking about bargain hunters, the most famous one that comes to my mind is Sir John Templeton. Templeton started his Wall Street career in 1938 and went on to create some of the world's most successful investment funds. He took the strategy of buy low, sell high to an extreme, picking nations, industries, and companies hitting rock bottom, or what he called points of maximum pessimism. When war began in Europe in 1939, he borrowed money from the bank to buy 100 shares each in 104 companies' stock that was trading at $1 or less, including 34 that were in bankruptcy. Only 4 turned out to be worthless, and he turned large profits on the others. The Money magazine called him arguably the greatest stockpicker of the century. Up next, we still have to meet Mr. and Mrs. Sentiment Trader. You will know a sentiment trader when you meet one. They buy from the heart, and you'd be surprised by how many sentiment traders are out there. So let's look at how a sentiment trader will behave. On March 12th, President Trump suspended travel from Europe to US. A sentiment trader would be like, "Oh no, this is the end of it all. A world with coronavirus means flights will never fly again. Airlines will go down, they will go bankrupt," and would sell all their airline and airline manufacturers' stock. And the graph shows it all. This is where my previous bargain hunter would jump in. Somebody's loss is someone else's gain. You'll be surprised that sentiment trading is a science. There's a principle called the Elliott wave principle. I will not claim to fully understand this principle, but in layman's terms, it studies the investor's sentiment, their behavior, and creates a pattern to alert investors when it's time to buy or sell. You would believe that it's not possible to monetize sentiment or emotion. Strangely enough, we live in a world where anything can be monetized, and a smart investor makes the right bet. My goal here on this channel is to make you a very smart investor. So, if you've not subscribed already, now might be a good time to hit that subscribe button. My last type of investor is a market timer. A market timer has a strategy of deciding whether to buy or sell stock by predicting future market movement. As you can imagine, this is very tough. But there are always people who get it right, and then there's 99 others who get it wrong. Guessing right once is a 50-50 proposition. Twice is 25%. This makes timing the market so difficult. But as a wise man said, it's not about timing the market, but time in the market. A man named John Paulson made $2 billion by timing the market in 2008. So it does work, but usually it works for some investors who have some sort of edge. Don't let that inspire you, as timing the market is not for an average investor. So if you're looking for some instant gratification, your odds of making money can be higher at the casino or the blackjack table. So here's the $1 million question. What kind of investor are you? What kind of investor do you want to be? In my view, it's like your diet. In general, you want to be eating healthy. You want to be a value or fundamental investor, as this will make sure your assets and wealth appreciate. However, it's okay to indulge sometimes. And sometimes, whether you like it or not, sentiment will make you buy things. For example, if you got a call from your friend and boom, in 3 clicks, you bought the stock. It's okay to do that as long as on most days you're eating healthy. I hope you enjoyed meeting all the types of investors, and more importantly, I hope it makes you stop for a minute and reflect on what kind of investor you want to be. If you enjoyed today's video, don't let anyone stop you from liking and subscribing. You hitting the like and subscribe button is like oxygen to this channel and will keep us motivated and going. As an audience, you will get to decide what you want to see next. Check the description below for a Google form where you get to give your input on what you want to see in future videos. Also, comment down below what kind of investor you are. If you like this video, once again hit the subscribe and like button. And friends, stay home and stay safe. This is your teenage investor, signing off.